Yes, sir. Your trade of the day is going to be Netflix, brought to you by Day Trade the World as always. Now, we have a free watch list every single morning. We do our morning prep. I got all my levels. I got all the stocks I'm watching. And then all of a sudden, a story drops after I've done my preparation about Netflix and the fact that they might have to return some money to advertisers because they couldn't meet inventory, they couldn't meet minimum views. And the stock, I'll get to the daily chart in a minute, but it does this. And you look, if you're trading at 8 o'clock or 7:40 in the morning and you capture moves like this, fantastic. But if you're unprepared and you've just seen the stock drop $15 up from $315 to $300, you can get that sense of FOMO. But you always want to make sure you have a plan. Go to the higher time frame. I was going to use a daily, but I kind of felt the 60-minute, like the hourly chart, 60-minute was going to do a little bit better here to show you justice of these levels. So Netflix been a good runner. It had a nice little bounce just going back into late last month, off of about 275 there, made a recent high at 330. And then if you look where that gap consolidation had support, it was right in front of $300. Then a double top of sorts at 330, which is 10% from 300, and you've got yourself a bit of a channel. Now, obviously, with the move down, that channel had already been tested. Now, I'm going to kick myself a little bit here because I was in a consolidation short in the pre-market, but this was so early, and I wouldn't normally trade a stock like this at 8:30 in the morning, and I had a nice 302. It was about 302 and a quarter short that I had on, and I'm thinking, okay, I'll just get out in front of 300. The problem here is I wasn't really thinking a 305 out, which isn't that bad of risk to reward. What I was really looking at was this bottom channel here at about 306, and saying to myself, if I'm wrong at 306, do I really favor a 302 short that I want to hold into the open? I don't. So when the market looked like it was trying to reverse, I just essentially got a flat. I might have made a few cents there, but it didn't matter. I wasn't holding that for $4 against me. That was not what I was looking for. Because then if 300 never breaks, then I can only win $2 to risk 4. It doesn't make a heck of a lot of sense. So I get out of the trade and then wait for that key level. Now, would it have worked? Yes, if I held on to that short, just an extra $2. Once 300 breaks, I'm thinking two things. First thing, on an even dollar break, you know it's a crowded trade. Everybody's going to be looking at it. Scalp, 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 the first thing. As easy as possible, this one was going to be, because $2.99 got filled almost right away. And next thing you know, you're $2.98. So you scalp a buck, you scalp $2. Now you're holding on for house money. And the question becomes, where did I want to hang on to? This is where I'm brought down to this channel. That's about 292 on the bottom end of that channel. And this is going to be tough to see, but this little consolidation in here, and including this lower high, gives you about 88 to 92. So that's the channel that I was working with. And I would have said this in the morning show. Yeah, right around 290, because that's the middle of that channel, is going to be the target. Once it broke that low at 92, my trailing stop goes in. You're into that range at 92. I'm looking for a target exit in the bottom of that range. Hopefully you get 88 to 90. But once it broke that channel, it came right back up, failed the break of that said 92 level. That breakdown ends up being a failed break on a lower time frame chart. I'm going to trail out of it. At the end of the day, could I have gotten better? Yeah, you could have gotten an extra $1.50 out of it. When you're holding something a little bit longer, you want to make sure you have a reason to get out. All well and good. Did you say, oh yeah, I'm getting out on this wick, getting out on this wick? Scalp trade done. That's just even dollar. Take the first dollar, take the second dollar. But the next out, let it trend all the way towards the target zone. And when it failed that level, no problem getting out of it. The key here is, it is so easy to get FOMO when you see these types of candles. You know you want to be a part of this trade. Whether you're catching a bounce here, good luck if you did in the pre-market, or you're looking for a consolidation short. But it's not enough to just be in and say it would have worked. Where would your out have been? What is the structure of your trade? What were you looking for? Did you have a scalp trade? Did you have something you wanted to hold all day long? Whatever works for you, you have to come up with that plan first so you can take advantage when news hits, and you have to quickly adjust to the new reality before the market opens there. That's why Netflix is your trade of the day. Tremendous opportunities every day in the market, but you don't always see this happen to a stock like Netflix.